Kia ora, I'm Sharon Brett-Kelly. Today on The Detail, the ballooning cost of insurance.
You squeeze and squeeze and squeeze, eventually something's going to pop.
I used to pay about $4.40 a month, so it's up to about $6.60 a month now. So that's insurance on the properties, insurance on vehicles, just everything in the packet.
We used to have medical insurance, house insurance, contents insurance, and also insurance like if my husband had an injury. We've had to cancel everything because we can't afford it.
We do look at it and reassess them annually as they come through. Yeah, it's just getting tighter.
Do we really need cover for our health, our jobs, our mortgage, our life and our pets?
It's never been more important, insurance. It's always been important, but now it's just on another level. So there's so many risks with everything, with housing, with medical needs. You know, we've seen so many climate changes coming through with regards to natural disasters, natural hazards.
Chris Walsh from Money Hub gives us his take on insurance and his controversial list of the ones we don't need.
Where does it stop, right? How many costs in my life are sort of taking a gamble on the what-ifs?
Bianca Russell reveals what happened when she took a hard look at her many insurance policies. First, let's do the numbers. The total amount New Zealanders spent on all insurance jumped from $11.5 billion in 2020 to $16.4 billion last year. Premiums are up sharply across the board, but perhaps most shocking is the rise in house insurance.
916% since the year 2000 for house insurance.
That's Consumer NZ's Head of Investigations, Rebecca Stiles. And yes, you heard correctly, nearly 1,000% rise in house insurance in the last 25 years. Rebecca says Consumer NZ's annual survey shows people are increasingly worried about the cost of their premiums, and the all-important house insurance is starting to take a hit.
Of those people who have dropped in house insurance have done so because of cost, and that number is sort of steadily rising. So in 2022 that was at 7%, and by the 2024 figures it had gone up to 17%. So we're still crunching the numbers for the 2025 survey, but yeah, I wouldn't be surprised if that goes up a little bit again.
That's a big jump.
It is a big jump in a short amount of time, and you know this cost of living crisis just keeps on going. So I mean it would be peak from 2022 through to now, and obviously there would be the impact of the extreme weather events on premiums during that time. It was sort of a sharp increase after, you know, the Auckland floods and Cyclone Gabrielle. So yeah, people are feeling the pain of those premiums for sure.
So what are people saying about it? Because you'd think that house insurance would be the last thing that people dropped. I mean, it's a big risk not having any cover on your house, isn't it?
That's a huge risk not to have any cover. I think what we're seeing through the data and just chatting to people that contact consumer, people are making a choice of like, do I drop contents insurance and keep house? So people don't see the same value in contents insurance. I mean, yeah, I think for most people it's a no-brainer that you would, of course, you would insure your house, and then that makes you get your EQC cover through that. So you're sorted if something happens. And I think people, well, they look at their contents insurance and think, oh, well, maybe I could replace my stuff if I had to, if the worst happened, and they're just making a financial decision to keep one over the other rather than both.
And what about other insurances like, well, you have to have third-party car insurance.
It's not compulsory car insurance in New Zealand, so no, you don't.
You don't have to have any kind of insurance on your car?
No. So, again, that is a risk. You know, if you're in an old dunga and you bang into a Tesla, I mean, that's an obvious, you're going to have to find some, and it's your fault, the accident, you're going to have to find some money in a hurry. And because it's not compulsory, I think people may look at their household budgets and say, well, I'll still do housing contents, and I've got two cars, but maybe I'll only insure the one that's worth most and let go of the other. So I think people still want cover, they still see the value in it, but are juggling their finances and amongst other, you know, growing expenses, and just making a call about what risks they can afford to carry.
And health insurance, what are people saying about that?
We get a lot of calls into our contact sector from people who are of an age where they need it, but the premiums are so expensive that it is prohibitive. So they're getting in touch and like, how can I keep some cover? So they might have this comprehensive, all the bells and whistles health insurance, and they might have to contact their insurer and say, look, I can't afford this anymore. It's just prohibitive. It's going up 20-30% a year. It might be going down to a lesser cover, like you might have surgery and cancer only cover rather than your comprehensive. So people are trying to juggle the levels of cover to cover what level of risks they want. And I think with issues of the public health sector, infrastructure, waiting ages to see your GP, the anxiety that the public health system isn't working at the moment sort of feeds into that real need to keep your health insurance, because if something happens, I want to see someone quickly and get it sorted. Whereas I think the perception is that may not happen in the public health system. So it's a real juggling act for people.
But is that perception, does that really play out? Because people I've talked to who have cancelled their insurance, older people, have said, well, they talked to their doctor about it and the doctor assured them that if they really needed hospital treatment, if it was urgent, they would get it.
Yeah, like if you had a car accident, obviously you'll get put through and you'll get sorted straight away, and like my dad had a stroke last year, so of course you're going straight through. If it's an acute emergency situation, you will be dealt with. It's a thing where you might get plopped on a wait list to see a specialist. I think that's where people see the value in health insurance, that they can sort of get ahead of the queue, so to speak, that there's this other system that they can access quicker.
Do you get people asking you, is there any other way? Because it's a bet, really, isn't it, insurance? That's what it boils down to. So is it smarter to put the money aside that you would have put on your insurance and just have it sitting there in your slush fund?
There is an argument for that, for sure. I guess it just depends how much you can put in your slush fund and whether that fund will be high enough for when you actually need it. And it would be easier with some insurances, perhaps. So, like, obviously a car is cheaper than your house. If you needed an operation, I don't know, for cancer or something, and you had to find, I'm just plucking figures out of the air now, 30K, it does come down to, like, what level of risk are you comfortable to cover? What financial resources do you have access to? Do you have money in the bank? Could you get some money quickly from family or from some other avenue? It is a balancing act, for sure, and it depends on the value of your assets, really. I mean, life insurance is a slightly different thing and health insurance is a slightly different thing, but we do hear from people that do decide to self-insure and just put money away.
Well, that was on Bianca Russell's mind when she decided to cut costs and rejig her insurances. She's 47, on a salary in middle management in Auckland, healthy and active. In fact, a former Olympian. But she doesn't just have the basics. She has at least 5 different insurance policies.
This year, I've dramatically reduced what I'm actually covering in terms of your financial backup. But yeah, there's a range of things there: income, trauma, and mortgage cover mainly.
And health?
No, yeah, I do have a separate health policy, which is probably the one that I value the most, to be honest. It's the one I call on most regularly.
Okay, so let's go through it. So you have trauma, mortgage cover, house and contents insurance?
It's mainly just content. My main home is in a body corporate situation where there's an insurance policy on the building itself.
Do you have one car or?
Car and a bike and a horse float.
So you have to insure all of them?
I do. And I was actually looking through some of my regular costs before this interview, sort of looking at what am I insuring and what does it cost me? Because it's one of those things I push to the background and go, I don't actually want to think about it. I'm not one of those people who is sort of financially enthusiastic. I've got other things I want to not worry about that and focus on the fun stuff. So when I was looking through, there was sort of car, bike, house, health, obviously, some income protection, which is frankly a mystery to me. Thank goodness for advisors. And then I sort of started thinking about it as well. And it's like, okay, well, there's the AA membership. And I thought that's kind of an insurance in a way because I'm insuring against my breakdown costs. And where does it stop, right? How many costs in my life are sort of taking a gamble on the what-ifs of I better cover that because if I run into this situation, whatever it might be, a health or an accident or a vehicle breakdown or damage, can I get myself out of this or am I in a bit of trouble? So I guess that's where I look at, do I need this product and how does it make me feel if I've got it in my back pocket? Am I feeling secure about my position? on this, and I can happily go about my life with some peace of mind, or is it something that I'm willing to take a risk on, or I have another backup option or plan on, and that might be some family support.
Have you calculated how much you actually spend monthly on insurance?
Yes, to my shock this week, in preparation for talking to you, Sharon, it's around about 8.5% of my salary. And when you look at just the raw number, it's like, crikey, that's a bit for sure. And here's an interesting one, right? Because if it was in the back pocket, would I save it and put it away as my own insurance policy, or put in a bit of a savings buffer? It's like, no, I know me. I have hobbies that are expensive. I am an equestrian, so there's a pony that gets everything it needs. I'm constantly walking around saying, well, we don't call it broke, we call it brocade. We call it, it's like you're broke because everything you earn is going out on your hobbies immediately. But I have kind of bougie broke because it's fancy hobbies like equestrian sports and riding fast motorbikes. So we call it brocade. I'm permanently brocade, but very happy.
I love that. Now, Bianca was just about to tell me which insurance she cut this year, but we lost her due to a bad line. But we'll get back to her because there's one big reason for all the money she spends on insurance. Let's go now to Chris Walsh, founder of the website Money Hub. It researches an array of financial products, from credit cards to student scholarships to insurance. A few years ago, it put out a list of 5 insurances you don't need. It's still controversial, but he backs it.
So one of them was pet. It depends on the pet. Look, we got a bit of backlash for this, but I'll stand by it because it is true. And certainly funeral. And certainly things like life insurance, when you just don't have the risk. Everyone has the risk of dying, but you don't have the risk of the debt. So if you look at the fact that, now that you're older, perhaps you don't have that, like if you haven't got the mortgage, then why do you have the life insurance for? I mean, that's usually to cover mortgage costs. And the same thing, sort of a close cousin to that, is income protection insurance. So these are great, these are great policies when you need them and when you have the risks. But as people get older, so much they don't really have those risks. So the first one was life, and the second one was contents. So this is when people have not much, but they actually like to sort of insure everything for a large amount of money, or they're getting, like $25,000 worth of contents, and it's costing them around $600 a year, but the excess is quite high, and it really is just like a few laptops, or maybe one laptop and one musical instrument. Phone insurance, that's since been scaled back by a bunch of insurers, so very few people offer that now. But yeah, I would add income protection onto there for people who just, people who don't need the protection, shouldn't be getting that insurance. That's an overall comment. That's not financial advice, but I mean, they just shouldn't because they're overpaying.
Can I check with you? What is income protection insurance, and when would somebody need it?
So when you need to claim on it because you get ill and you can't work, usually you'd use up your sick leave, and then how it's designed is that will keep paying you out. I mean, it's going to sort of depend on what you set it up originally. You can't change it once you're claiming on it. And that can be quite good for people who are in high-risk jobs or who are prone to getting ill. That's widely sold, and it's usually sold alongside life insurance. So that's why people take it on. It just takes away the stress. But we've seen a range of prices depending on the insurer, and also you can change the benefits to what, or you can sort of mix and match to what sort of meets your needs. So you may want a shorter period of income protection, say 2 years or even 1 year, or as long as 5 years, and that's all going to drive the policy cost.
So, Chris, just for clarity, does Money Hub have any affiliations with any of the insurance companies? I'm just checking that you're giving sort of an unbiased account of the whole insurance scene.
Sure. So the answer is we work with a few insurance companies and we fully disclaim those. So we make that very clear on the pages. But at the same time, we sort of suggest to everybody, please compare widely, because we want people to get the best possible quotes.
Does anybody ever say to you, what's the alternative to getting insurance? I have heard a few people talk about, well, the money that you pay the insurer, you could just put into your bank account, or you could invest it.
So self-insurance is popular, and I'm seeing it more and more from what I read and understand through health insurance for older New Zealanders. They're being faced with quite large bills once they reach 70, 75, and they look at that and they think, actually, it may be better to take, if it's a $10,000 renewal fee or like a $15,000, $20,000 for a couple, just to take that money, cancel the policy, and put that money aside, or just try and self-insure as much as possible. I wouldn't, and certainly not financial advice, but I certainly wouldn't recommend like people self-insure a house. It's going to be a large asset which they can't sort of afford. And the same with travel, because there is like huge risk there. It's also looking at sort of lowering insurance as well. So rather than go for a full car insurance, they may want to look at third party, because that lowers the cost. And if the car isn't worth much, then that's a saving worth having. So self-insurance is fine, but you really have to make sure that you're prepared to pay for the ongoing costs. If you suddenly do need all these medical treatments, and we know from what we've read on RNZ and everything that there's issues with a waiting list, then you'll need to pay that $20,000 for that small surgery, and like a sort of microsurgery here, and a replacement this and that you can't get on the public system. So self-insurance, case by case basis, I would say.
But Chris, if someone came to you and said, I can't afford all my insurances anymore, someone who's got maybe life and mortgage and car and house and contents and perhaps some other insurances, and they said, I just can't afford all of these anymore, what would you say is the bare minimum, the absolute essential? How would you help somebody work through something like that?
We're not financial advisors. We don't provide any custom advice. We just provide information. This is why it really is important to look at all your risks and then appropriately compare and make sure you're covered for what you need to be covered, but at the same time try and avoid over-insuring, because that is an issue as well. And also under-insuring. People find that their home isn't properly insured, and like the sum insured amount is too little for when like something happens and they need to like fix it. And then of course the prices of materials surge and they're not adequately covered. So looking at all the risks holistically, taking it very slowly and just knocking them out one by one, and looking at the total cost. And if you can't afford it, then just prioritize, what you can and insure for that as much as you can.
What is over-insurance?
Yeah, what it means is that you're insured for things that actually have low risk to you, or you don't need to be insured for at all. So for example, if you have a car that's perhaps worth, $1,000 and you're paying like full comprehensive on it, with a $1,000 excess, then it's going to cost you $1,000 to claim on it at the same time you're paying for like full comprehensive. That's an extreme example. If you have life insurance, but you've paid off all your mortgage, you have, say, $1 million invested, you're in your 60s, do you still need this life insurance cover? And that's what people are sort of working out now, is like, well, actually, I may not, because I don't have the risk previously. If I died, then I would be short on the mortgage, and my loved ones would need to be able to work through like whatever's left. But now, if people aren't like facing those risks, as they don't have the debt, then there's no issue there at all. So they can look at unwinding some of their insurance. It's all about the risk assessment and risk provisioning.
So what's playing on people's minds when they take a good look at their insurance? Rebecca Stiles at Consumer NZ.
Health insurance has really just shot up in the last 6 months. People are really worried about the affordability and whether they can still have it. I think there's a growing awareness with house insurance about the impacts of climate change and how the risks are going up and how that's impacting premiums. I think there's a growing awareness of that, but I think there needs to be more. And just how insurers are coming up, how they calculate the premiums. I think that it feels quite opaque to people, how a premium is arrived at, and it's so individualised now. Like a house insurance is down to your house. So your house on one side of the street might be more expensive than one on the other side of the street because of different risks to different houses. So that just sort of individualisation of risk rather than spreading the risk across a community, that things that are happening in the sector, and I think will just continue to escalate as climate change impacts.
What's the outlook? It's going to keep on rising.
It's not often we see it go cheaper. There are sort of peaks and troughs. It does seem to level out, and then if there's an event, it will go up and then it might level out again, but we never see it sort of drop dramatically.
Have you talked to the insurers? Do you think they can do a better job of communicating with their customers?
Yeah, I think it is such a complex thing, insurance, and people know they should have it, and it protects their assets. It can means that their family can be protected if something happens to them. But I think how prices are arrived at, more information about how to navigate different policies, what they actually mean. I think people aren't getting quite the full picture of what they need to be covered for and what's sort of an extra. So I think it's just a continual thing of, more transparency, just cutting to the chase and telling people what a product is and what it does, just getting through the guff and getting to the essence of it. Sometimes I think some of the advertising or images of getting them in there in their fluoro vests after an emergency is all well and good, but it doesn't actually tell people what they're actually covered for in that event and how quickly their claim will be dealt with if it happens.
Bianca Russell cut her life policy this year, but held on to everything else, including trauma and health, but for good reason.
The health cover came to me at a different time entirely. So my background is in hockey and high performance sport. And during that time, I did get into a situation where I needed some surgery to continue playing. It needed to be done privately because it was at the time deemed to be a wear and tear thing, not a injury or accident. And so I was faced with the situation of needing to go private in a hurry to get that done to continue a hockey career. And I'm super glad I did. But there was expense there that I had to cough up with. So I sort of realised that this was a thing, and later on got myself some health insurance cover. Yeah, it's an interesting one too, but it's basically around that. When you want to get something done to preserve your lifestyle and you don't want to wait around for the public system, that's sort of where it happens, right? Whereas later on in life I went and saw my mum's financial advisor, who was just having a friendly chat as a bit of a favour and some budget advice as I was a lot younger and coming out of a sports career, sort of trying to set up a new career option, if you like. And he was the one that actually said, look, the base of your financial triangle is to set in your income protection insurances, and this is what I need, and this is what you should be looking to cover. And if you have that, you can build your wealth on top of it. So that was the first introduction I ever had to even really the concept of what is income protection. I didn't have a mortgage at that time, but what sort of things were available. And then I went and had a connection through our hockey club. Actually, it was a sponsor of our hockey club, one of the teams, who happened to be a financial advisor insurance broker. And so I just went and saw her and said, look, Nikki, come sort me out. What do I need? Explain this stuff to me in terms I can understand. And effectively had to place all my trust in that person and put in place the as I say, this bottom of this financial triangle as it had been explained to me.
So, Bianca, basically, you're willing to spend all that money on insurance and you feel you can sort of afford it. You're poor but happy, as you say, but you're willing to continue with these different insurances that you have because it gives you peace of mind.
Yeah, that's exactly right. It is giving me the backup option that says, hey, if some of these things happen that I think have a fairly good odd of happening, then I've got some cover and some peace of mind that I can continue to live and not be a massive burden on any of my loved ones.
That's it for today. The Detail is a newsroom production supported by RNZ and NZ On Air. Today's podcast was produced by Gwen McClure and engineered by Phil Benge. Thanks to Bianca Russell, Chris Walsh and Rebecca Stiles. I'm Sharon Brett Kelly. Mā te wā.